On today's World Insight, the recent collapse of three banks in the US and Europe has put global banking into focus. We speak to Michele Wucker, economist and expert on crisis anticipation, on what looms ahead.
And it's so imperative right now for all countries to be collaborating.
Hello and welcome to World Insight with me, Tian Wei. The spring meetings of the World Bank and International Monetary Fund policymakers have convened. Central bankers and finance ministers have been joined by leading business executives worldwide in taking a hard look at the world economic outlook, crucial aid and poverty alleviation efforts. The meetings are also carrying the mission to prevent crises which should have been seen coming, but with little success in recognizing them and fixing them in time. The Gray Rhinos, so to speak, a term coined by Michele Wucker, who has been researching about the global economy over the decades. It is a metaphor for the threats that we can see yet do nothing about. And here is my conversation with Michele Wucker today. Michele Wucker, what a pleasure to see you once again.
I'm so happy to be back in China, and it's great to see you too.
I'm so happy to see you and see many of those who are researching with credibility about China are coming back to China to do their research, including you. Michele, tell me more about, since you invented the term Gray Rhinos, tell me exactly what might be the Gray Rhinos we're facing today.
Well, I always tell people that perspective is important. And of course, I look at things from a big global macro point of view. So people should take what I say and then think specifically about how it relates to their own situation, because they're going to see that way better than I do. But on the global macro level, there are three big things that I see. One is these financial fragilities that I've been talking about for a long time, debt overhangs, the effects of the popping of a very, very large asset bubble because of very low monetary policy, very, very loose monetary policy for so long, and corporate debt and bank instability. Now we're starting to see all of these come together, these things that I've been talking about for some time that were just delayed by the pandemic. Along with that is climate change, which also has a very big financial impact. It's for insurance companies, whether they're capitalized enough for the extreme weather that we're seeing, how municipalities and governments are going to pay, both for the damages, but also for the zero carbon transition. And I've been talking for quite some time about inequality, and it relates to both of those. But now the inequality, I think, has really morphed into a new form by sparking a lot of populism. And often domestic problems spill over into international tensions because the oldest political trick in the book is to say, okay, we're going to blame the immigrants, we're going to blame the other countries. And we see so much of that in the United States right now with the political instability that we're having, with all of the economic problems that we've had. And so for me, even geopolitical tensions have risen above inequality, even though they're partly caused by it. And I'm quite concerned about that. So all three of these come together in a crash, a group of Gray Rhinos that make each of the others even more powerful than it would be on its own.
Economic situation, climate change related issues, as well as geopolitics intertwined with one another, making the Gray Rhinos in the room, shall I say, ever more dangerous. Why do you see politics and international governance has systematically been incapable of dealing with Gray Rhinos? Is there something wrong with what we are having today in our world?
I think there's always resistance to change, and that becomes even stronger when people get into groups. And of course, globally, you see group upon group upon group all coming together. It makes it that much more complicated. I think it also has to do with differences in risk perceptions and responses among different countries around the world. One of the things that really came out of the Gray Rhino for me was how different China and other countries in Asia see risks and respond compared to the US and the rest of the West, with Europe somewhere in between. And I think often one country might perceive one risk, and it's a completely different conversation from the other country or group of countries.
Give me an example.
Well, for example, with immigration, countries in the global South are much more worried about people leaving, people not sending back enough remittances, losing skills, whereas countries in the global North are worried about political tensions, social tensions because of too much change in people. But also, if you see some of these polls around the world about how countries feel about climate change, how much they worry about public safety, how much they worry about skills and talent and human capital, it's very, very different in countries around the world. And so the business community and government and people are going to be thinking and worrying about very different things. And we have so many global problems that affect every country. Some countries are contributing more to those, like climate change, than others, and other countries are affected more, again, with climate change. And so you have very, very different risk dynamics in countries around the world. And people are not talking directly about those often enough, and not taking into account the risks that other countries see. So that's, it's a real danger because people aren't speaking the same language when it comes to risk.
At the recent World Bank IMF spring meeting, people have been voicing about their increasing concerns of increasing speed of fragmentations in our world today, and people's apparent willingness to accept it and go with it. Now, given the Gray Rhinos that you illustrated earlier, what do you make of this reality, and what do you see is the temperature right now?
I'm very worried, to be honest. The temperature is not a comfortable one. And I think that we are seeing a lot of these fragmentations globally because each country is dealing with its own internal problems in different ways. And every country has different issues. And I think some of the imbalances around the world are really making that harder. You had some of the lower income countries during the pandemic who weren't able to boost their economies in the same way that some of the wealthier countries were. So they're coming out of that with more economic instability, with debt burdens. They've, in many cases, lost more people to the pandemic, and they are going to need a helping hand from the countries that are more able to help them. And at the same time, all of these domestic problems in whatever country, in a certain way, sort of pale in comparison to the global problems that we're facing with climate change. And it's so imperative right now for all countries to be collaborating on reducing greenhouse gas emissions, on improving access to clean technologies, working together to do everything they can. Because if that doesn't happen, then all we're doing in any other issues is rearranging deck chairs on the Titanic, as they say.
What you said, very interesting, especially when you say in the United States there are many people that are still looking at China-US relations as constructive. Well, if you read the media, I'm not saying which country, I'm just saying if you read the media as a whole, it seems that that's not a picture being reflected at all. So which one is propaganda? Which one is reality? That's very confusing. Your thoughts as an economist?
You know, I think today this gap between reality and illusion is perhaps one of the biggest meta Gray Rhinos that is standing in the way of solving problems. I read somewhere media give 8 times as much attention to the more radical, dramatic, reality show seeking kind of politicians than they do to the ones who are talking seriously about how to solve problems and not just putting on a show. And so media more and more fails to reflect the diversity and the nuance behind a lot of positions. And I think that media have learned that the more outrage something generates, the more clicks it's going to get, the more advertising dollars. And it's not just media, it's the advertisers who support this. And it's the people who turn it on and who click and who watch this. So we need a lot more media literacy, particularly in the West, where I think people have this idea that what we watch isn't propaganda, when it's a distorted view of reality. And that's becoming worse and worse and worse with the way social media has been unfolding, with all of the new technologies. This failure to really perceive reality is frightening to me.
This is an interesting point because in a way, Michele, you're trying to suggest it's not only that people are not doing something about the Gray Rhinos, but rather exaggerate its impact and trying to take advantage of the impacts of Gray Rhinos and accelerate its negativity in a way.
People in the policy world tend to create sort of an echo chamber, not always more constructive, but it's much easier to see an echo chamber when you're not in the middle of it.
And be aware of that. Media literacy, so to speak. Of course, the media we're talking about are not just the traditional media organizations and their outreach, but also social media that's having a huge impact on all of us. Having said that, let's move on to talk about the economy. Right now, there is a danger of high inflation, high interest rates, and also high debt, while at the same time, low growth worldwide. That applies to almost every economy. Of course, people argue about the role of the Fed and the US dollar. So, Michele, what do you make of that element as Gray Rhino?
Well, often the Gray Rhino is a whole bunch of Gray Rhinos in a line. We're seeing the financial fragilities all erupt right now. We're seeing stagflation. Very, very high inflation for very different reasons in very different parts of economies. You are seeing interest rates going up and creating problems with government budgets, with zombie companies that can no longer finance their debt through current earnings and that can't refinance their debt, and that lots of maturities starting to come due. That's creating banking instability. We're seeing real estate problems in many parts of the world. And of course, this is something that China has been paying attention to for much longer, that really opened their eyes and said, we have to do something about this much sooner than other countries did. So it's in a different part of the cycle, but we're in a difficult time. One of the points that I don't think have gotten enough attention is the relationship between asset inflation and inflation in the real economy. Some of this asset inflation, particularly when it applies to real estate, passes through towards rents, towards cost of living, towards the cost of goods in stores and places, because their costs have gone up. So it ripples through the entire economy. Or, for example, commodities or gold, metals that are often seen as a hedge against inflation. The other part is supply versus demand influences on inflation. Now, raising interest rates is supposedly a way to reduce demand for goods and thus help to suppress prices. But we don't pay enough attention to the supply side. For many years, we had too much supply, too much money, too much stuff going out there. And there was so much of it that actually kept inflation low. And now we're having not enough stuff. And if you're going to produce more things, you actually need more inputs into the real economy. And going back to asset inflation, when you have people deciding to put their money into secondary markets, into stock markets, into casinos, instead of into real businesses that make things, that produce things, that create things, then that also is affecting inflation. And that's a dynamic that definitely in the West does not get enough attention. And I do know that in China, because of many of the conversations I've had, there are more concerns about that dynamic.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
China has been practicing what it calls as internal circulation, external circulation. What is your understanding of the logic behind this?
It's interesting. People can easily misinterpret the dual circulation policies. In some ways, they might at first seem to resemble some of the import substitution policies of the past that in Latin America, where I began my work, didn't work so much. But I think it's more useful to think about dual circulation as a way of increasing consumption, as a way of rebalancing the economy from investment to consumption, making sure that the investment is done in such a way that it supports consumption and brings the economy into better balance. And also, I think there's an element of it that ties into this relocalization, regionalization of economies, that the closer a product is to its intended market, the lower the emissions are going to be. And as China's income has grown, there's certainly been a demand for things that people couldn't afford in China before. So I think dual circulation recognizes the growing capacity within China for being a consumption-driven economy, not just investment.
Putting political rhetorics aside, what do you make of the recent continuous actions of raising interest rates by the Fed? And how will that having an impact on the U.S. role in the global economic and financial picture?
Well, many of the people who I respect the most, and I tend to agree with them, feel that the Fed waited too long to start raising rates and has done it too fast in a way that has caused unintended consequences. The other side of the argument, which I also can understand, is that it's important to move quickly. Once they recognize they're trying to make up for lost time, and unfortunately, we're seeing that hit bank stability. We saw a major bank failure recently, and a couple smaller banks that's had some contagion effects globally. So that's been a problem. At the same time, I remember back to the great financial crisis when there was some frustration that the US didn't have as much control over its monetary policy as you might think. So we saw countries like Brazil complaining of the unintended side effects of US monetary policy, making it very hard for them during the time when we were trying to come out of the great financial crisis. And we also saw people in the United States saying that that we had to make bigger and more forceful moves because the dollar was so widely distributed around the world that it diffused the impact in the United States.
Yeah, if you look at the financial crisis 2008, 2007, there was already a tremendous problem, but We haven't seen the calamity of it, and yet 2008 it was very clear. Now, with the problems of SVB and some of the other banks, Credit Suisse, even though that problem seems to be already somewhat resolved. So what do you make of the potential danger that we're facing right now in terms of our economies?
What surprised me about the SVB and other bank situations was how very, very quickly authorities stepped in once things started to go wrong. Although we've learned in hindsight that there were many, many warnings from regulators over the past couple of years already. I think that the trade-off was between allowing the bank weakness to create more bank runs or to risk creating moral hazard, that this would encourage more misbehaving by banks. And I do think short term that the authorities made the right decision. We have seen money shifting from smaller banks into some of the bigger banks, which down the road could create a much bigger moral hazard, too big to fail problem. We've also seen funds moving from smaller banks into money market funds. And I just read that that's causing banks to raise the interest rates that they're paying depositors. And so that's good for people on fixed incomes. It's not so good for bank profits. So we're going to see that playing out. We're going to see harder access to capital for startups. It's becoming much harder to get capital. We're definitely going to see a slowdown. And I think that we need to look at putting back in place some of the protective measures that were put in, because we learned from the great financial crisis. And I was surprised at how quickly we unlearned. But all of these situations, the economic weakness, that's all going to play into the presidential campaign going forward. And this is another situation where the facts versus illusion comes into place. And I really fear about what sort of mix of misinformation is going to be flying around out there. I see it as a very, very dangerous time where you have economic and political instabilities coming together all at once. And the social media and other, tech and regular media environment, we're seeing lots and lots of journalists being laid off across industry in the United States. So it's a very, very difficult, worrisome time.
Both challenges and opportunities. Of course, ChatGPT, GPT-4, the new language models have been very much advocated in recent weeks, particularly. So how do you see these are actually adding to our ability to deal with and realizing the dangers of gray rhinos? Or they could be gray rhinos of their own with our inabilities to deal with the consequences for side effects.
Well, ChatGPT and its peers and competitors are certainly a gray rhino, and that includes the danger side and the opportunity side. I had a great chat last week with a friend of mine, a professional journalist I've known for years, who was talking about how she's experimenting with ChatGPT and other AI personas to do research and practicing how to phrase questions to get what she wants, how she got in an argument with one of them, which was quite funny. And she says that in many cases, it can be very helpful with research, but the problem is where the sources are. I mean, I would love to see versions where you can control where the information is coming from, where it's reliable sources. Although some of the sources that we've often thought of as reliable have turned out to be not as reliable as we thought. If you could say, hey, here's this bibliography, go to these sources and spit out a report on it. The kind of thing that I often will ask research assistants to do. I think that could save lots and lots of time. But the problem is that so much of what's coming out, we have absolutely no idea where it's coming from. Apparently there's a new lawsuit, someone who ChatGPT said had done a crime when he actually hadn't. it's kind of a big deal. That there have been complaints about academic papers, people attempting to write academic papers during using ChatGPT and giving it credit in the author line, which is crazy. Teachers are trying to figure out how they're going to help kids. I mean, I remember when I was growing up, it was a big deal when calculators first came out and whether you could take calculators to school or not. We need to teach people how to use these tools responsibly. And we need the right identifiers so that you can know if something was done using AI. I mean, a lot of us who are highly literate can read something and know immediately that it was AI. Like I get these stupid spam emails that say, I noticed that blah, 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 some random fact from, my website. And it's AI, but not everybody has that level of scrutiny. And the AI is going to get better and better. So it's not going to be as easy to tell. So we need to be able to create a very clear line between what is human created, what is human supervised, and what is just crazy AI pulling stuff from who knows where on the internet, whether it's true or not. And that combined with the misinformation environment that we have already and the political polarization, and you bring all that together and it could be extremely, extremely dangerous.
It's very interesting, sometimes sarcastic, I think, to think the fact that how much has been put into the research of these new technologies, and yet how little, in comparison, efforts have been put into the sophistication understanding of these technologies, and also the people's literacy of these technologies. But having said that, though, it's always a pleasure, Michele Wucker, to see you, and thank you so much for sharing your thoughts along the way with us.
Thank you so much for the invitation, and it's really wonderful to see you again and to be back in China after way too long, and I'm looking forward to many, many more trips to one of my favorite countries.
That's Michele Wucker, author of the book Gray Rhino, an economist who has been doing research about the Chinese economy and that of the world for some time. That's all we have for today. You can find us on YouTube, Twitter, and Facebook. I'm Tian Wei. Thanks for watching. I'll see you back here tomorrow.